I think I would make them three. One is there's still many technological challenges. You can only do about 7 transactions a second on Bitcoin, and our main credit card system here in the US, you can do 25,000 transactions a second. So just the scalability, the performance, the efficiency of blockchain, it's still early days. I believe over time we'll get there, but it's still technical challenges. Amongst those technical challenges are privacy. And for the financial industry to use an open blockchain like Bitcoin or something, they'll also need to use new means to keep the privacy of customer data. Number two, there's really a question of where are the best commercial use cases. Blockchain on some level is a database system. And because it's a database system, the question is, why use it instead of some traditional database? I believe that there are many uses that don't need to be on a blockchain, but where you really do need to have time stamping and adding information and information where people have property rights, those are good commercial uses. So number one is technical. Number two is what are the commercial use cases? And number three is what you asked about regulation. I think it needs to come within the public policy space. Whether it's in China, whether it's in the US, whether it's in Europe, I think we still want to collect our taxes. The official sector and the government does not want to see people avoiding paying taxes. They don't want to see people using a new means and method to do old crime. Illicit activity, terrorist things, and so forth. And yes, it needs some investor protection. The crypto exchanges right now are generally not regulated for investor protection. So we have to overcome technical issues, which I think we will, but it might take 3 to 7 years to do that. It won't be 3 to 7 months. You have to be really focused on where there's a real commercial reason to do it. And thirdly, I think we need to live within the public policy envelope, not outside. I think it's the governments around the globe, it's best to promote economic activity by being technological neutral, but at the same time, we still want to guard against illicit activity. We still want to ensure for financial stability, and thirdly, protect investors. So you mentioned initial coin offerings. Initial coin offerings are a way to raise money by venture capitalists and entrepreneurs to raise money. That's very interesting. Even one might say exciting, but investors still need protection. And without that protection, this is a world with a lot of fraud and scams. And until we sort of bring it inside the public policy regime, I think the real potential won't be achieved. You're so correct that there's always a balance in public policy and while promoting the economy. But I do believe that for this technology to prosper and this new form of financing, initial coin offerings, to possibly be part of the capital markets, we have to protect investors for the same things we've tried to protect them for in the past. Protecting against fraud, manipulation, and importantly, the issuer, somebody raising money, always has more information. So can they share that and give full and fair disclosures to the public? I think without that, this is going to be looked back as kind of a blip in history. I think it will shrink rather than grow without investor protection. I think that in Western economies prospered out of the Great Depression of the 1930s by implementing investor protection regimes. I think that businesses could grow, investors could participate. I think in China that those reforms came later, but those reforms of the 1990s and later in China as well, that when investors have confidence in the markets and they can make their choices and take risk, they're going to participate more. And so I think that regulation and innovation go hand in hand. I don't believe they conflict. I think that we all drive on the roads at night because we know there's traffic lights, we know there's stop signs, and we know there's speed limits. And more of us are willing to buy an automobile because we know they're safe to drive because of the traffic lights, stop signs, and speed limits. I think so too for the highways of finance. A little bit of stop signs and traffic lights and speed limits just slow down some innovators. It does, but the same way on the highway, it slows down some trucks. But passengers are safer and buy more cars. I don't want to predict what the U.S. securities regulators would do, but I'll say what I think. First, we have to ensure that the crypto exchanges are fully regulated. And until that happens, there should be no confidence in this market. I repeat, no confidence in this market that there's not manipulative behavior rife in the marketplace. The crypto exchanges are where 98 or 99% of the activity is. I think in each of our countries we should bring them inside and make sure that they are well regulated. Then exchange traded funds would have something upon which they can rely. Step one, get the exchanges into a investor protection space. More important than ETFs, more important than initial coin offerings, the exchanges. That's where 98% of the action is. And I would suggest hold off on the ETFs until you get the exchanges under some semblance of investor protection. I'd like to say something that I think Chairman Clayton of the Securities and Exchange Commission has said, is comply with the law. Our investor protection laws in the U.S. have been around for some time. If there's some challenge about a small part, of course, go see the SEC about that challenge. But it's about full and fair disclosure to customers. It's about ensuring that your sales and marketing material is not manipulative or just fraudulent. I'd say that's a better answer than some of the complex structures that the lawyers are coming up with. It's basically treat your investors with respect and not try to pick their pocket. I think that you'll see a number of trends in the crypto exchange world. One is likely consolidation. There's about 200 exchanges. At some point, this will shake out and there'll be fewer. Two, I think some that are offering securities-like tokens that are registered with the SEC, those exchanges will register as broker-dealers under Regulation Alternative Trading System here in the U.S., or Reg ATS. And that will be in the next 6 to 18 months. But the more uncertain piece is, what about those exchanges that are just offering exchange for Bitcoin or Ethereum? And that will be more interesting to watch. I think the Intercontinental Exchange will have a big influence as they get into this business. And if others start to get in a regulated way, I think a lot of business might move to the markets where there's greater confidence. More price transparency, more customer assurance that they're not just getting picked off by manipulation. Well, in our country, we don't have currency controls, but in your country, you have currency controls, so I would think that through Bitcoin mining, they are in essence converting renminbi for electricity, converting the electricity to Bitcoin, and converting the Bitcoin to dollars and euros. So in essence, I think that it's quite possible that the reason the two big mining pools, the two largest, are in China, is they're in essence converting renminbi through electricity and Bitcoin to dollars.
So the government has considered as okay.
Now, again, we don't have currency controls here, but I'm saying if you know, it's interesting. Now, you might also have cheap electricity and high-cost transmission lines. There might be other local political reasons that it's happening.